So, Johnny, why do governments actually care about encouraging blockchain adoption and digital assets? What's in it for them?
Well, I think there's two things. First of all, really interesting to see the UK FCA, who are the regulator in the financial service sector. Like all regulators across the world, they have really two main goals. One is to protect the confidence in the system, and therefore regulate banks and asset managers, etc., accordingly. And the other one is to protect clients' assets, to make sure that they're not being ripped off and fraudulent activities. But the FCA have come out with a third one, and that is that they want to encourage innovation, to make the system a little bit more efficient. And we've seen them actions speaking louder than words, and they've set up the sandbox, which has now been running for a while, where they're encouraging innovation in a protected environment so they can see how good this innovation can be. But I suspect there's slightly ulterior motives, because according to some statistics, there's in excess of 20,000 people involved in the digital asset sector. And some statistics we were looking coming out of the States recently, the average salary for someone involved in the digital asset sector is £59,000 a year. So if you take a 25% tax take, that's $290 million worth of income tax. So this is why I think we're seeing partially a bit of a battle going on at the moment. The Americans are a little bit behind this in many ways, and it's now being driven to a large extent by the Swiss, by the Germans, and by the Brits. And they're trying to actually almost compete so that they can be the most favourable, the most user-friendly jurisdiction to encourage people to set up blockchain and digital asset businesses within that jurisdiction, because then they can capture some of that tax take.